If you see this, please save us. I don't even see our American flag anymore. Biden is talking with some kind of crazy flag. This is America. This is our land.
Trump supporters were very obvious.
Oh my gosh. Well, I was looking and see the top trending on YouTube today, and it was phase someone and phase someone else, switch girlfriend. So, you know, the world isn't focused on the market too much, but here we go. Swapping girlfriends
Very
with
open
phase.
attitude towards life.
Good morning! Me and Alexa are switching boyfriends for the day.
So the whole world isn't focused on GME, but everyone I know is right now. And the commentary is just kind of ridiculous. Essentially, every single person has an opinion on GME, and all these people that like should have no place in the world at commenting on the stock market are like jumping in with their own opinions, and it's just crazy nutso. Hold on, I'm having a little problem with my camera here. Let's see if I can fix it. What is going on? Can you see me? Jeez, some streaming problems. Anyways, we're back to just a plain screen as streaming seems to be having some serious issues at the moment. However, you can see me, so I guess that's a good thing. I'm not sure why none of this stuff is working at the moment, but we will try to fix it as quickly as possible. Yeah, just really strange situation with GME today. The last couple of days, there's been people commentating on this that have no business talking about these things. Even the commentators on CNBC who are hosts but not traders are jumping in on the game. Everybody seems to have something to say about the stock market who has nothing to do with stocks. As much as I like watching like political commentary, they should stay out of stocks. All of this stuff that somehow it's not legitimate for people that are retail traders to jump in on this market is a bunch of nonsense. If you are placing yourself at risk, by that I mean if you are jumping into the stock market and you are taking a risk by buying or selling something, putting your money at risk, then you have as much right as anybody else to be in that market. And a lot of this commentary on GME is just speculation. Use your common sense for one thing. When we look at the stock here, we can see that this thing is, you know, outrageously overpriced right now. And as soon as this trade gets completely unwound and the people that are being squeezed give up, this thing is going to come crashing down. Mark my words, it will come crashing down. I'm sorry for the weirdness of the content at the moment. Something's wrong with my computers, but I am back. As Brent was referring to, it is not easy to trade options in GME right now. I don't know if you guys have tried, but at least from my end of things with TD Ameritrade, they only allow you to sell a strike that you already own, first of all. Second of all, they weren't allowing you to do spread. The only way you can do spreads is if you're closing on both sides. And so it makes it extremely difficult to trade, to trade this, because really the only way that makes sense to actually get long or short is with spreads, right? Because everything else is just extremely, extremely high priced. Now, when you trade a spread, that kind of negates that pricing, the volatility, because you're buying a high-priced option, you're selling a high-priced option against it, so it sort of negates things. But if you are left with just buying or selling individual options, and you can only sell stuff that you own, it makes it extremely difficult. In this case, obviously, the market makers have the upper hand. Now, this is going to inevitably go down at some point, and I think that's pretty much universally known. It just doesn't know what the path between now and there will be. I was very lucky, let's say, in GME because that day, what was it, Tuesday, if we look at the chart here, Tuesday, at this point that I'm pointing to, it was around $100, right? This was around $100. I went out there and I sold some of the 200 calls, right? I thought I was real smart. I sold some of the 200 calls. I sold 2 of the front week 200 calls. I sold 2 of the second week 200 calls. And I sold 2 of the third week 200 calls, and I sold 1 more 200 call. So I was naked short 7 of the 200 calls at one point on Tuesday. The front week ones I sold for $9. I bought back for $4, and then stuff started to go to go against. Right, it started to rally, and it went from 89 up to like 100 and I think like 112 or 113. At which point I said, I'm done. I covered my whole position, and I was left just with 2 of the 195 200 call verticals I was long going into Wednesday. So those worked out, obviously, because we were well above 200 pretty soon, but definitely did lose money that first day on this, being short calls and then covering them. However, the bright side of things was that I did close my VXX position when I jumped into GME. So I was not short any calls in VXX coming into the spike in volatility. And let's talk for a second about the spike in volatility yesterday, because it was pretty extreme, and we are upside down. Yeah, it's, you know, we have as much right as individuals to be trading this stuff as these big wigs on Wall Street. And when they say, you know, we're going to halt this woman who's running the NASDAQ came out and said that she wants to halt GME for a month. That's sort of like to show all of us traders, to teach us a lesson or something like that. I don't think somebody who says something like that has no awareness of like options, and you know how much it would mess up people that were trading options if you just close it for a month. Basically, if you close it for a month, that makes every option that expires in that period between when it's closed and reopens, it essentially expires at that moment that they halt it. And that being true as far as your P&L, however, you would your gains or losses would be just stuck for a while until they reopen. So it would be a real nightmare for anybody who is long any options if they decided to halt this thing. And I would continue to follow the news closely if you are long any options in GameStop, because I don't know how real that risk is, but it definitely is a scary thing that they're talking about possibly halting things. And this is just people in the establishment saying they don't like the price action, so they're going to halt it. They don't like the fact that people are trying to take money from other people. They say, well, we don't like the fact that people are buying this based on wanting to take money from the hedge funds. The hedge funds want to take money from all of us. That's the whole game here. So that's just ridiculous. And I was watching this guy on CNBC, and he was saying, these people on Wall Street bets, I bet they haven't really looked very hard at charts. I bet they haven't spent a lot of time looking at charts, as if looking at charts somehow is the legitimate way to make money in the stock market, as if doing quote unquote research is going to give you some sort of insight into which way a stock is going to go. Like if I stare at an Apple chart for a while, that's going to tell me which way Apple is going to go? Really? It's ridiculous. So the short shares thing has been explained in a lot of other videos. I have a good video that I put out. Well, you guys can decide if it's good or not, but I put out a video a couple years ago talking about the hard to borrow market. Now, the hard to borrow market is pretty shady. I'm sure most people who are watching now understand shorting stocks and the fact that you need to borrow someone else's shares if you want to short a stock. And when you borrow someone else's shares, they can come and say they want to take back those shares at any point, in which case what happens is it's called you get bought in. And so whatever shares you were short, all of a sudden you have to buy them back at whatever price the market happens to be at that moment, and you have to go find new shares to go out and short again. So the hard to borrow market is a very difficult one. XRT ETF. I don't know. I don't want to comment on that. I don't really follow that too much. Probably Brent's probably a better guy to talk about that one. But this isn't the only stock that's gone up. AMC has also gone up, but this stock is destined to go lower at some point soon. Let's go on and talk about the vol spike yesterday, which was a pretty extreme spike. I apologize once again for why my screen looks so weird. I'm not really quite sure why that is, but we're going to try to fix it at some point here. It's very strange. But let's go and take a look at the VIX term structure, because we are upside down right now as far as the VIX goes. And this is... we had a really big spike yesterday. We can see VIX 32 now. We were up to 37 after the close, and we are inverted upside down, and we'll see if the market continues to sell off, and if this affects this GME stock at some point. GME stock really just kind of ignoring everything to do with the rest of the market, and just it's on its own. But mark my words, folks, this will come crashing down at some point soon. We just don't know when. At some point, the people that are sitting there and own these shares are going to go, what am I doing? And then it's going to start crashing down. And as this trade unwinds, I was writing in the comments before I started the program a little bit to Jay there, but as this short trade unwinds, there will become shares that are available to borrow to sell it short. B, it's going to stop getting squeezed as much to the upside, and you're going to see people. What's happening now is that people are getting in the habit of being able to I'll buy 100 shares and it's going to go up really quickly and I'm going to make money, because that's worked for 1-2 days, 1-2 hours. And all of a sudden, the same people that have been buying it all the way up are going to end up buying it all the way down, a lot of them, and they're going to get stuffed every step of the way as it sells off. So I would be very careful if I were you with this one, thinking about getting long it. Of course, many people have made money getting long it, but I would be extremely careful if I were you with that one, because this is destined to go lower. It just is. The quote unquote fundamentals of the stock are just not there for it to be at these crazy prices, and I think everybody knows that, and it's got to be very frustrating for those hedge fund people that were forced to cover, because there is a lot of blood in the water here. I was looking at the open interest. If we look at how many options traded just in these January 200 calls, 100,000 of them traded in one day, and some people have gotten just smoke-a-rama killed in this one. If we look at the open interest on the 200 strike, and right now it's showing 12,000. I think that's because a lot of people had to close yesterday, but it was up to 100,000. A lot of them closed out, of course, but and they've made it significantly harder to trade in the last day or two, as the clearing firms came in and got scared and kind of notched everyone away from trading it. As we see, we just saw a fall of $100 in the last 10 minutes in this one. If you wanted to risk 1K short, I mean, you could. The only thing you could really do is buy some way out of the money put, right? So if you look here, we're closed right now, but you could go ahead and try to buy something like the 50 put expiring tomorrow. Or you could try to buy some put a week out for $10. You could try to find some option for $10 that's one put, but thinking about it, it's really hard to do that, because A, it could stay up here for a few days. B, even if you're right in direction, if you buy one of like the 50 puts for $10 or something, that means your break-even point is $40. Right now, this stock is $4.07. So, you know, if you look at something like Tilray, for example, and what happened to Tilray after it had the big spike up, it did go down, but it was like a slow. It went down over a period of days. It wasn't like one day it just went straight back down again, right? So, it's really a hard thing to play. Let's see. I have to go back farther than this, I guess, in Tilray. So here's the spike in Tilray if I get out of the way here for a second. And you can see it spiked up to 300, and then it ripped back down about halfway, but then it took actually a couple months for it to get back to where it started from. So to expect that this is going to go back to like 50 today or tomorrow, I don't think is right. So I would suggest to you that you use your 1K for something different than trying to buy like one put in GME. I know it seems exciting and all that, but it's a risky business. You know, AMC is another one that might be a better one to try to play if you were looking to be short, because you know, the numbers are a little bit more reasonable when you look at puts. But and I don't know the requirements with this one as far as what you're allowed to or not allowed to do, but this would be a better one if you could buy one put and sell another. That would be, I think that would be a decent trade. Go out to like March. Right now this is well, it's going to open 15, but you know, if we get a pop back to 19 in this one or something, you know, buy the 16-12 put spread or something like that and hang out, because it's pretty inevitable that this is very likely to go lower. But, you know, nothing's for sure in the stock market, and I can't guarantee. Obviously, nobody knows what's going to happen in the future, especially me. And, you know, when you come on and you listen to people talk about the stock market, everybody wants somebody to come on and tell them what's going to happen, and nobody knows what's going to happen. So if someone comes on and tells you this is going to happen, I would be very skeptical of them. That's the whole game with trading, is that you kind of have to come up with your own ideas. And I know it's harder that way, but that's just kind of the way it is, because if you just follow someone else's ideas, then it kind of lets you off the hook if they're wrong, right? So if if Dave says sell VXX and then it doesn't go down, then you turn around and say, oh, well, Dave was wrong. I lost money because Dave was wrong. Is that developing you as a trader at all? Not really, right? If Dave says sell VXX and it goes down and you make money, it's good that you made money, but are you developing as a trader? Are you are you adding value to your ability to make money? No. So the kind of the point of my channel is just to see one guy making some trades and executing stuff, and one guy's thought process. But you need to develop your own way of doing things, your own thought process, to become a trader. That's just the way it works. And so look at some stuff, try to come up with some ideas, try some stuff out, and that's kind of how your journey begins. And but just using your common sense is a good starting point. And with GME, common sense, when you look at that chart, it looks silly, right? It's not like they just discover, if this was a chart of a stock that just discovered the cure for cancer, then okay. But what have they discovered? I get most of my games from Steam, right? How much is the market for used video games really, how much of a future does that have? And how much value does this company add over any other company? Do they have some special way of delivering used video games that nobody else has thought of? I don't think so. So, I don't need to spend too much time making the case that this is overvalued. I think that's pretty obvious to everybody. And actually, we've dropped $150. It looks like in just a little while. Oh no, we're at 411 right now. So I wonder where it says that. We're at 411 right now. I wonder if this is going to be the high of 513, or if we make newer highs every day for like a week and we get to 1,000 or something. I guess it really depends on how long these hedge funds are willing to fight this, because some people are still short here and they're getting squeezed, obviously. But once most of the short interest is unwound, this will fall apart. It's my advice to everybody would just be grab some popcorn, check it out, have fun watching it, and look at other stuff to trade. So VXX, let's just talk about VXX really quickly. So my position, and this is a great example of why you should not do exactly what I'm doing, because last time I came on, I was talking about how I had naked short calls in VXX, and that was my whole position. And if you had just put that position on, you would have gotten killed. But I didn't get killed because I bailed out of it very quickly, pretty much right after that. So you can see my P&L from yesterday. I did lose $63 in VXX, but losing $63 in a VXX that I'm almost always short when it's up. What was it up? It was up from 16 to 20 yesterday. So, I think it was up something like 30% yesterday. So, losing $63 when it's up 30% ain't bad. Right now, my position is, you can see it on the bottom of the screen here, but I'm essentially long the 5 Feb 1920, 19.5 20 call spread 4 times, plus I'm long 1 extra 19.5 call, and I'm short 2 of the 23 calls. So I'm naked short 1 call in VXX combined with being long call spreads. So if I look at my Analyze tab, so it shows, let's see, so it shows actually me making money up on the day, but I think that's wrong, because I think something's wrong with this Analyze tab here, because I shouldn't be making money up on up 100%. So yeah, there's an extra call in there, or extra calls in there. So essentially, if this goes up 100%, I lose $1,000. Big deal. So no position really. What's going on, David Modell? Nice to have you in the chat. Crazy times out there. Everybody has to keep their head. What I don't want to see is people losing money in these things. So I know it's exciting when you hear people are making money and you see these big moves in GME and stuff like that. Everybody wants to participate when they see a big move, but let's not lose our heads and lose money because we're chasing after big returns. It's fun to watch. People are talking all over the place. It's like our market and our stuff is actually in the news. People are talking about a stock in the news as opposed to other stuff for a change. So that's always fun. But don't lose your head. This thing is going to go back down at some point very soon. So I would be extremely careful about buying shares in this. And as far as selling shares, I wouldn't do it at all. You're not going to be able to probably get shares anyway, but the only way to play this is with options, and it's very difficult to play it with options right now because you're not allowed to sell anything, and thus you can't put spreads on. Now, I don't know if some other firms are different than Thinkorswim, but Thinkorswim will not allow you to sell an option unless you own it right now in GME, and so that's kind of shut down a lot of the market. And it really annoys me that they change the rules on you in the middle of trading something. You're in the middle of trading GME, and all of a sudden they come, oh, by the way, you can't trade spreads anymore. Oh, by the way, you can't sell anything. So I go ahead and I buy a put the other day. My intention was I'm going to buy 1 strike, and then I'm going to sell another strike against it. I was doing that the first day that this was moving. I bought the 20 put for $5.10, and I sold the 19 put below it for $5.40. And I'm like, oh, great. I'll just leg into 1 lot put spreads for credits and, make a little money here and there and have some free spreads on. All of a sudden, I go and I buy a put, and then I try to sell one against it, and it says, we are not allowing sales in this strike anymore. So, it's really frustrating when they just go ahead and change the rules on everybody. As I'm talking, the E-minis are rallying up 21 now. We were down a lot. The VIX is now down 6 points, and we are still inverted, but we're kind of coming out of it a little bit. you could see as the VIX moved around a lot, and we kind of, the term structure kind of tilted on its head yesterday. These products moved up a little bit, but not nearly as much as if they were just based directly on the VIX, right? You know, the VIX up 7, and you had VXX up like 4 as the term structure reversed itself. Now we're still inverted. We'll see if we can straighten things out. Yeah, so Dave was talking about not just GME, but EXPR has been insane, and AMC has been insane too, and they've put these restrictions on. So it's very hard to trade when people are changing the rules on you all the time. And so I suppose we need to anticipate these when they're changing the rules on us, because it seems to be happening more and more, and it's extremely frustrating, I know. So I would keep your eyes on the prize. For me, I am looking for an entry into some of these VIX products, since we are at an elevated level here. I'm looking at entry into buying probably some put spreads in VXX. It looks like VXX is poised to open down about 75 cents here, but we'll see what happens today with the markets, because stuff is still moving around a lot. And it doesn't feel like this is really over with this craziness in the market. You know, VVIX 157 yesterday. That is a huge number. So, you know, the VIX term structure is in a elevated state, and we will see if that translates into more downside action in the market or not. Right now, I'm pretty much risk off. We'll see what happens moving forward. I've already talked long enough, so I'm going to let you go. Thanks, everybody, for tuning in today, and I will probably be back tomorrow with continued coverage of GME and other stocks of interest to you. Thanks for checking out the show today. And March 25 puts, huh, J. Rose? You know what I bought yesterday was, they're probably not going to work out, but what I bought yesterday was I paid $5 for, I'm sorry, I paid $4.80 for one of the 115 puts in the front week, and I paid, I think I paid $3 for one of the 79 puts. So really just essentially throwing money out the window here, but we'll see. We'll see if we get a big down move today. Maybe these puts will come back to life here. I was looking at like a couple weeks out, like 22 days out. I was looking at like the something like the 75 puts, you know, 22 days out, but you're spending $2,000 for one put. And obviously you're not looking at the break-even point here with these. You're just looking at, okay, well, we get a $50 down move. These could pop up a couple bucks and I can get out of them. That's the kind of thing we're looking at. But, you know, you got to be careful with this stuff, and who knows what restrictions they're going to put on next. But it seems pretty safe that if you buy an option, you'll be able to sell it. But, you know, these are higher level volatilities than we've pretty much ever seen before. So you don't necessarily want to buy the highest volatility of all time. It doesn't seem like a smart thing to do. So I would be very cautious, J. Rose, about what you're going to buy. Of course, I saw caution. Let's see. So it is moving lower right now. Okay, I'm going to let you go. I've talked enough. Thanks for watching. See you next time. Bye. Roll the outro.
You're watching Famous Dave.